Hey there, it's Melissa with Atlas CFO. I'm so glad to spend some time with you today, and we are going to dive into our next financial statement, which is our profit and loss, also known as an income statement. And we're going to do not only this video in 15 minutes or less, but also give you the tips on how to read yours in 15 minutes or less. So first, what is the profit and loss or the income statement? And if I say income statement, I mean the profit and loss. If I say profit and loss, I mean the income statement. It really depends on your software and what your software calls it. We've even seen some other names in different software packages. I've seen operating statement as well, but just know they're all the same thing. They are all going to be measuring your income and expenses over a period of time that is typically monthly, yearly, quarterly. So there's a beginning and an end, which means we're going to start at the beginning of the month and end at the end of the month. One of the things that is very important when we think about profit and loss statements or income statements is that we have a beginning and an end. An income statement isn't just the 1st through the 15th of the next month. It should be in a period of time like a month, a quarter, or a year. There are just a few key components to the income statement, which is revenue, otherwise known as the volume. How much volume and sales are you doing during the year? The next section for contractors is direct cost, sometimes known as cost of goods sold, sometimes known as job cost. Again, these different words are based on your software. The goal of this top section, revenue minus cost of goods sold, is to get to gross profit. Gross profit should represent how you're doing on your jobs. Now, this is tricky because if you are mixing and matching your job cost and your overhead cost and they're kind of all over the place, this isn't going to work for you. So one of the key items to take away from just this little top section is to make sure that you have apples and apples comparison, meaning the top section down to gross profit should represent your job profitability, anything that is job costed, and then build on the project. You don't have anything in this group that is not associated with a job. Likewise, in our overhead, we want pure overhead costs, nothing that is associated with a job. This gives you a very clean look and a very simple understanding of how you're doing. So you can quickly say, how much work did I do? How profitable was I on this work? And then how much of my overhead did I cover? And what is the excess net income? There are really only 3 levers in the income statement. The balance sheet actually has a ton of levers, but the income statement really only has 3. The 3 are increase, decrease revenue or volume, increase, decrease job performance. I just call it performance. And our last one, overhead, same thing, increase or decrease overhead. They all work together, but one of them tends to be the one that you are most focused on today. It will change. So in the beginning of the year, many of our contractors are very focused on volume. We are trying to get that backlog built. As you move more into summer, you might be more interested in job performance because you're going to get all that work done and you need it to be profitable. Whenever you get towards the end of the year, you may be looking ahead for your overhead, thinking about your budgets and what you're going to have for the next year. Now, that's just a typical cycle. I can tell you that they do change. And the key to this for you is to identify which one of them is most important to you right now as you're reviewing today's income statement, which is based on either a month, a quarter, or a year. You can quickly identify which one is most important and then focus there for the next month, quarter. So a few tips here. Number 1, if you have other things that aren't accurate, this is also not accurate. The income statement is the effect of 2 accurate, reconciled, complete balance sheets. Balance sheet on each end, income statement in the middle. So if one of your balance sheets is incorrect, you are going to have an incorrect income statement. If you aren't using percent complete, you're going to have timing differences. If there's something that's just flat out wrong, well, you can't trust it. I'm going to jump all the way down to the bottom one and say that whenever you're looking at your P&L, your income statement, it should feel right. I know this sounds crazy from an accountant, but that's true. After all these years of talking to business owners and having them look at their income statement, they can usually tell me whether it's right or wrong. Isn't that crazy? Whenever we find that the owner is saying, yeah, that feels pretty right, we usually have kind of consistent practices. There's things across the company that are being reconciled. If they say it feels a little wrong, then we usually have a timing difference, unreconciled accounts, accuracy issues. So just know that you want to make sure to kind of check in with yourself and use a little intuition as you review this. Backing up to our percent complete, if you have timing differences and you are not using the percent complete method, you will see wobbly income statements, which means you're going to have a great month and a poor month. The percent complete method takes that out of the income statement and creates stability. And whenever you're looking at it, I'm going to use the words from my old boss: a number is just a number unless you have another number to compare it to. This is very true on the income statement. So we want to compare to a prior period, to expectations, to jobs, to job performance, to budgets. The key to the income statement is comparison. That will give you some sort of an idea of whether this is really working and you've got a good plan moving forward, or if you're feeling like, gosh, maybe we're ticking back from last quarter, or we're not really hitting the same numbers that I'm showing on my job performance. So this is a good statement to use comparison on. One of the things that we're doing this year is we are creating a benchmark tool. We're real excited about this. We've been testing it just on our contractors so far, and the benchmark tool is giving us this one, being able to compare to something. So we're using industry averages to compare to, so we can say whether you're on or off. If you'd like to look at it or like more information, just send us an email, or that's probably the best thing. Send us an email, or you could type in on one of our forms on our website. All right, I told you fast. Gosh, 7 minutes. Boom. Thanks for spending time with me today. If you'd like more on the financial statements, be sure to sign up for our free 7-day boot camp on our website. Good to see you. I'll see you next month.